a scream. Welcome, Omar.
Great. Thank you for having us, Ishay. Wrapping up the year end is no easy feat for nonprofits. And when you add the pandemic to the mix, there's even more complexity to account for. Just a quick introduction. As you heard a little bit, I'm Omar. I'm the CEO and co-founder of Enkel. And today I also have my colleague, Christine, here. Christine is one of our controllers at Enkel, and she's the head of our not-for-profit organization division. She has years of experience working alongside nonprofit organizations in Canada. So really happy to have her here with me today. A little bit about Enkel. We're a back office service provider, and we provide nonprofit organizations across Canada with bookkeeping, payroll, accounts payable, accounts receivable, and controllership services. Today, we'll be talking about some common challenges that we often see nonprofits facing during the year-end process, some tips on closing the year more efficiently, and some key financial reports you should generate for your board members. All right, let's get into it. Let's keep in mind that these are unusual times. Auditors are busier than they've ever been. Audit schedules are tight, fees are increasing, and this year more than ever, you want to make your auditor's life easier, or it will cost you in terms of delays and money. At Enkel, we work with many nonprofit organizations, and here are some of the challenges that we've seen organizations face during the year-end reporting process. All right. So one of the key trends we see with nonprofits is the inability to maintain systems for transaction support. This impacts the organization at audit time, but also in other compliance areas. Keep in mind that sound record keeping and document management have broad implications that also include your obligations with the Canada Revenue Agency, your funders, and your donors. So really, what's contained in this slide in this section isn't only limited to the year-end audit. It's relevant to a wide variety of other areas of your organization. As an example, when it comes to maintaining transaction support, the CRA requires organizations to retain their source documents, like receipts and invoices, for 6 years from the end of the last tax year they relate to. And oftentimes, we see organizations that lack a formalized policy for organizing and storing these source documents, which can, of course, be problematic if you're ever audited. Another thing we see is organizations having physical filing cabinets to store these source documents. I mean, there's theoretically nothing wrong with storing these documents in a filing cabinet, but having a physical filing cabinet, of course, increases the organization's risk of the documents getting lost or destroyed, and can also be tedious at audit time, particularly with many audits being done virtually these days. In a similar vein, we see organizations with poor bookkeeping practices that affect their ability to wrap up the year-end efficiently. Some of these poor practices include having transactions in the accounting system that are unclear or miscoded, leaving management with the challenge of explaining transactions and providing necessary support for these transactions. When your organization doesn't have good bookkeeping hygiene throughout the year, it will snowball and affect your year-end process. The year-end process will take longer and it will cost your organization more. The second challenge we see nonprofits facing during the year is getting the financial statements, accounting standards for not-for-profit organization ready. That's a mouthful, so I'll just say ASNPO. ASNPO is the reporting framework used to audit Canadian not-for-profits. If you are having a review engagement or audit engagement, your books need to be GAAP compliant and hence need to be prepared in accordance with ASNPO. Revenue recognition is particularly challenging for some organizations. You will need to have clarity on whether to use the deferral method or the restricted fund method before you can close out the year. Ideally, you should have prepared your financials on a monthly or quarterly basis using the right methodology to avoid a big project before the year-end audit. Another part of getting your financial statements audit ready is to capture all accruals appropriately, and this is especially relevant during COVID-19. The pandemic has, for instance, forced many organizations to postpone events that they've already accrued charges for. Even though you might not have an invoice supporting these expenses, they are still liabilities that need to be reported. Cutoff errors are also common problems with getting financial statements ASNPO ready. Organizations often record transactions in the wrong period, which would result in inaccurate financials. An example that we often see is organizations not cutting off donations close to year end. So donations end up in the wrong period. Since December is often a strong month for donations and often lines up with an NPO or charity's year end, this can be of particular concern. All right, challenge number 3, preparing financial statements before day 1 of your audit. On top of getting your books ASNPO ready, the preparation of financial statements can also present a challenge to many organizations. Auditors will want to see a set of draft financial statements with note disclosures before they start the audit. This is something we are seeing more of, particularly nowadays with auditors being as busy as they are. The first step is, of course, to have your books completely closed before you prepare these draft statements. Not having the books completely closed will make this messy, as the numbers will need to continuously be updated. We often see organizations that start the audit process without their numbers being finalized for the year. And that means the auditors are required to scrutinize the numbers in even more detail and sample larger amounts of data to be comfortable enough to sign off on the financials. This will cause your audit bill to increase by a considerable amount. Challenge number 4, gathering all audit documentation before the audit starts. The year-end process can also be challenging if your organization doesn't have a bookkeeper that can prepare the documents required by auditors during the audit. The auditors often refer to the documents they need as the PBC package. That stands for Prepared by Client. An auditor's dream is to get a set of financial statements and note disclosures where all numbers are supported by detailed schedules where they can see the transaction detail. It is from these supporting schedules where they will select their audit samples. The cleaner you can make this process, the better. Now, this will be hard to achieve if you do not have a bookkeeper or controller to get these documents together. That said, if you have not had a bookkeeper throughout the year, it might be a good idea to get one in to help you get the books audit ready. All right. Now we're going to get into sharing some recommendations on how to get ahead of these year-end challenges that I've just outlined. So the first tip here, and full disclosure, this tip here, if you haven't done it throughout the year, might not be relevant for this past year, but could be relevant going forward. So this first tip is to overcome your year-end challenges by compiling all of your source documents digitally. Many organizations tend to store their source documents in physical storage cabinets. This increases, like I said earlier, the risk of documents getting lost or destroyed. Therefore, we always recommend using a digital storage system. There are many different ways that you can use technology to organize your source documents. One way would be to use an expense management software like Dext. We're a big fan of Dext because it simplifies the way documents are captured. The user can simply take a photo of their receipt or invoice, and the app will scan and extract the key information from the document and store the image of the document in the cloud, leaving an audit trail. With respect to the year-end audit, many auditors will have their own portals where they will want to have the documents uploaded. Typically, providing the documents to the auditor works in a few steps. First, you provide the documents required in the PBC package or Prepared by Client listing that we talked about on the previous slide. There are the numbers and supporting schedules that support those numbers. And second, your auditor will select a sample from which they will then need documents that you will have to provide so that they can do their audit sampling. If you have used tools like Dext and you've integrated Dext with QuickBooks Online, you will easily be able to download support for transactions and provide it to your auditor. If you use a paper-based system, you will need to dig into the filing cabinet and share support with your auditor. This could also mean scanning the document in and uploading it.
Great tip. Thank you, Omar.
All right.
Let's move to tip number 2. Review your books in depth and ahead of time. This is really important. Earlier on, we spoke about poor bookkeeping practices affecting the nonprofit year-end process. If your books are not in good shape or you are new to the organization, we recommend doing a deep dive into your books before the audit starts. You want to ensure that your bank and credit card accounts are reconciled. If you haven't locked the books on a monthly basis, and that simply means making sure that people can't make transactions backwards or in previous sessions, do a spot check to make sure your accounts still reconcile. You should also look to see if any of the checks you've issued are stale dated. Stale dated simply means 6 months or older. So if you've written a check that still hasn't cleared your account from 6 months ago, consider reaching out to vendors to address the item before your auditor asks about it. Dealing with these issues will minimize the number of adjustments needed once the auditors start their work, and also reduces the cost of your audit. Let's move on to tip 3. Tip 3 is a little fulsome. It's going to be covered in a couple of slides. And the first part of tip 3, which covers ensuring your bookkeeping records are AS/NPO ready, is revenue recognition and deferred revenue. You want to look at what has been recognized and ensure that it reflects the economic reality of what has occurred. For example, is there any funding that will have to be returned to your funders after year end? Is there any funding that you can put aside till next year? If so, you want to ensure that it is appropriately reflected. Have you recognized revenue in accordance with contracts? Especially important with those COVID-19 subsidies that came up recently. The key thing here is to minimize surprises. Knowing your funding agreements and possible repayment obligations is critical. Of course, knowing what you've spent is key, and that is hard to do without good bookkeeping and record keeping. All right, let's move on to the other part of tip 3. We're going to talk about accruals. Think through your exposure to expenses that may show up but are not reflected in the books. That's what accruals are. So as we previously mentioned, for your financials to be, and there's that mouthful, AS/NPO ready, you'll also need to ensure your accruals are reflected in the books. We see this more with COVID, where organizations have unpaid rent or costs associated with canceled events or even lawsuits. Even though you might not have an invoice for these expenses, it is still a liability that your organization has and should be reflected on your books. Your auditor will also want some form of supporting documentation for these events to corroborate the completeness of the accrual. Let's say you have agreed with your landlord to a reduced rental amount, but the rent is in arrears. Correspondence with your landlord on the revised rents can be used to support this accrual. That would be the supporting documentation. Now, finally, the end of tip 3, review transaction cutoff dates. You should also review the transaction cutoff dates to ensure your books are compliant. This happens a lot with year-end donations, especially nonprofits that have that December year-end. Your organization might receive the donation at the end of the year, but the donation is only cleared in the new year. Your book should reflect the actual day that the donations were collected, not the day it was cleared. And that's really relevant for any year end. If you have a March year end and someone has intended to make a donation as March 31st, but it didn't clear your bank till April 4th, that is considered a March donation. If you use donation management software like Keela, you can easily track when the donations were made and ensure the donations are recorded in the right period in your books. Now, here is tip number 4. Make sure that your books are audit ready. So a good way to keep your audit fees down is to do just that. Make sure that your books are audit ready. You want to ensure that your books are accurate and up to date. Ideally, you should keep your schedules and reconciliations up to date throughout the year so that you're always prepared for the audit. And that could be deferred revenue schedules, capital asset schedules. Before the audit begins, your trial balance, statement of operations, and statement of financial position should also all be up to date. And you should have all of the source documents prepared for the auditors. There shouldn't be much changes to your books by this point. Any problems that arise during the audit will cause delays in the audit process and often increase your audit fees. If there's a going concern risk to your organization due to COVID-19, you'll also need to prepare pro forma financial statements and cash flow forecasts to prove otherwise to the auditors. And now let's move to tip number 5. Hire a temporary bookkeeper to support your audit. A common challenge that smaller NPOs face is the lack of a bookkeeper to support with the audit. In that case, you might want to consider hiring a temporary bookkeeper to help you review your books and ensure your supporting schedules are accurate, descriptive, and gather the supporting documentation required during the audit process. They can also help with certain tasks that would reduce the auditor's hours. You want to keep your audit fees down, so you can also ask the auditor for a list of items they'll need for testing or sampling to make the audit more efficient. And that's the 5 tips we have for overcoming these year-end challenges. Next, I'll hand it back to Omar to share the reports that you should prepare for your board members.
Great, thank you, Christine. So as you get through the year-end process, or maybe even in advance, your board will want to start planning for the next fiscal year. The board's role is to put a good strategic plan for the new year in place, approve a budget, and ensure that the organization has sufficient cash to fund that plan. To help with that, you should start by providing them with a budget versus actual report by program or by department. By comparing the actual expense to the budget, the board can measure the management team's year-to-date performance and understand where the variances lie, and then also analyze the root cause of these variances. And based on that, they can make appropriate strategic decisions of whether to invest more in a program or to cut funding. This ensures that there's proper stewardship of the organization's resources. Cash flow is always a challenge for nonprofits. You'll need a cash flow forecast to stay on top of the inflow and outflow of funds. Your organization might have a lot of cash, but if a good percentage of that is restricted funding, then your resources may actually be more limited than it seems. The board needs to use the cash flow forecast to identify potential cash deficits or surpluses ahead of time so that the funds can be managed appropriately. These reports can also help them make informed decisions and ensure that the organization has funds to carry out its mission. These reports should regularly be generated through the year and reviewed by the board or finance committee. An experienced NPO accounting team can help you prepare for year-end and put together these reports for your board. They can also support you through the year with keeping your records up to date and ensuring your board is well informed of your organization's financial health. And with that, thank you all very much for tuning into our webinar. We hope these tips will help you wrap up your year-end more smoothly. Now we'll open the floor for some questions. Thank you.